Hello, hello, hello. How we doing? How we doing? Hopefully everyone is doing well. I'm gonna make my post here. Okay. Click that, make sure everything sounds good. You might hear my voice again. Yep. I think that sounds good. Yep. All right. All right, all right, all right. Scooby Doo, what's up? How you doing this morning? Nice frigid Monday morning here in good old Kentucky. Not bad though. Awesome. Glad to hear it. Looks like things with the market's pretty tame. Nothing's really. The indexes aren't down too much, ain't up too much. What's everyone into this morning? This is one to hang out for a bit. Might be able to find some new interesting dividend stocks I haven't seen or heard of from yins. Looking for mid-cap growth stocks with good fundamentals. Good fundamentals, good financials. Lots of room. Yep. Yep. I hear you there. I know Ulta, they've got their earnings coming out here in a couple of days, and I get paid on Friday. So if they drop, I'm going to be dropping some into it. Some mid-cap growth. Are you looking for dividend payers, or what's your recipe you're looking for? And when it comes to like mid-cap, small-cap, I don't really look at caps all that much whenever it comes to whatever I'm looking at or investing into. Total return. Um, I mean, if you're wanting to throw a dart and something that's been on a run for a while, I mean, not financial advice, but maybe you want to look into Celsius. They just had a profitable quarter. EPS has been growing, as you see here, quarter over quarter, positive. Revenue's been growing quarter over quarter like crazy. Net income, EBITDA, their free cash flow is growing. Their return on capital is growing, as you see here. Gross margins growing. Operating margins are now positive. Profit margins are positive. And it's $12 billion market cap, so I think that might fit into what you're looking for. I don't know. Again, not financial advice. Always do your own research. But last 5 years, this thing's up 4,000%. In the last 10 years, it's up 34,000%. So, looking to buy CMI. I watched some couple YouTube videos this morning. I know the Dividend Diplomats was talking about CMI Cummings. I mean, they've got a good adjusted cash flow yield right now, 5.44%. So that tells me it's not super expensive. And usually industrials do pretty well no matter what the environment. Let's take a dive here into Cummins real quick. So over the last 5 years, looks like their peak was around 280. They had a recent one, 265, down to 223 right now. Revenues increased and they raised 6.57% over the last 5 years. Not too bad. The free cash flow is declining, so I don't know what's going on there. Dividend yield right at 3%. Payout ratio is nice and low, 32%. EPS is growing. They got great debt management here. Under $5 billion in debt. Their EBITDA last year was $3 billion. And the dividend increasing at a rate of over 10% last 10 years. High single-digit growth here the last couple times. I mean, it looks like a good company. Definitely one if you're looking for an industrial stock to throw your monies into. I know I've seen a lot of the news articles. Good boy. Into. Sorry, my dog was yiping in his sleep. But yeah, I see that there's a lot of positive news toward it. A-graded dividend stock keeps shining, long-term buy. Ultra Swan bargains. It's just when it comes to the industrial sector, I like John Deere a little bit more. I know it's a bit more pricey. It's adjusted free cash flow yield's a little bit lower. But I don't know. I like them a little bit more. I feel like they've got a little bit better return on capital. They're doing share buybacks. Yeah. They're buying back shares pretty aggressively right now, which you always want to see. But I mean, there's nothing wrong with Cummins. Another one I really like, I have it in my portfolio, is Canadian National Railway. Railroad companies. I would like to add some more railroad companies to my portfolio. I just haven't had the chance to. Last opportunity I had was Canadian National, and I think I got in on it at 104. Let's see. Yeah, 104.92 is my average cost basis with CNI right now. So is anyone looking into anything this morning? Looking to buy? Or looking to sell? Or just looking to just sit? I know I'm currently just sitting on my hands, letting the market come to me, letting the stocks drop into my buy zones. And if they don't, I just put a little bit in the SCHD every week. Kind of getting my annual basis up. Oh, excuse me. Burp. I really like Celsius though. That's one that's been like on my personal radar, and I like their drinks a lot. Like they're so good. And again, invest in what you know. Think some big name investors by the name of Warren Buffett and Peter Lynch says that. Invest in what you know. Absolute behemoths. I know here lately it just seems like Microsoft can't do wrong. 3 green flags for their futures. Microsoft, the Nvidia killer. That's what they're saying about it now. SCHD or VYM. SCHD here, I feel like they've got more dividend growth and appreciation, but I know a lot of people like VYM too. I feel like VYM's got a lower beta, so it's not going to be as all over the place. It's not going to drop or rise as much. Let's see here. The thing I love about Qualtrics, I can put ETFs in there. It's too good. Yeah, the dividend, VYM's dividend's been increasing at a rate about 6% over the last 10 years. And I'm looking for stuff to hold for anywhere from 14 to 19 years. That's my investment horizon that I'm hoping to be able to accomplish. And SCHD, over the last 10 years, dividend increase right at 11%. It's just, I feel like in the long run, I'm going to get a little bit more bang for my buck with SCHD. Again, just my personal opinion. I know a lot of people hold both. And I've thought about doing some type of ETF hybrid combination in my portfolio. Because right now, the way that it's sitting, I just have SCHD. And then I have my satellite positions built around it. SCHD makes up about 34%. And I think my individual holdings range anywhere from 12 to 3. But I've been thinking about maybe jumping into VOO or DGRO. VYM and DGRO are pretty weak. Well, I mean, I wouldn't say that they're weak. VYM, I feel, is more secure in the long run. And DGRO, the thing that's going to help it is their biggest holding is Microsoft. And it just seems like here lately, Microsoft cannot do wrong. They just keep on keeping on. What is DGRO's top 10 holdings here? Let's go take a look. I'm curious. Let's see. Oh my god, it's like Ad City on this. Okay. Holdings tab. Yeah, I mean, their biggest one's Microsoft. You got Apple. Johnson Johnson's in there. AbbVie, Chevron, Procter & Gamble, Broadcom, Pfizer. I mean, it's pretty good. I feel like it's a pretty solid top 10 list. I do mostly SCHD with some VIG. VIG is another good one. I mean, VIG is basically the S&P 500 plus, well, minus anything that doesn't pay a dividend. Can I just do it like that? Well, ETF.com, let me do that. It sure will. But yeah, that I think I held VIG for a little bit. Yeah, it's basically the S&P 500, the things that pay dividends in it, minus the ones that don't pay dividends. Microsoft's the biggest holding in that too. I feel like Microsoft here shortly is going to take over from the market cap king. Be number one in VOO, be number one in QQQ. But I've been thinking about trying possibly starting up like a hybrid position with my ETFs. Like I said, I haven't been 100% committed to one. I mean, you can never go wrong with VOO. I feel like when in doubt, just invest in the S&P 500 and don't worry about it. Yeah, Microsoft's the biggest holding in VOO now. Have they successfully passed Apple in market cap? Let's see here. Apple's sitting at 2.95. Microsoft's sitting at 2.81. I don't know. I don't know why it's like that. So I thought these were market cap weighted. Interesting. I don't know why it's like that, but either or, like, tech is the future. Like, that is apparent as can be. If 2023 has stamped anything in, it is that. That's the reason why I've got such a heavy position. I know, like, you might look at MasterCard and think that MasterCard is, you know, a financial stock. But I mean, they do a lot of tech stuff too, like a lot. They were borderline tech company in my eyes, with all their tracking and just like just in general, the stuff that this company does is more than just take payments. And this is another one I wouldn't mind to just have a bigger and bigger position in. Like I was lucky enough, and I sold some of my other holdings. I had a position in Pepsi and McDonald's that I was green on, and this reported earnings and dipped. I got in at 380. It dipped down to 360s, and I sold out of those. I loaded up on more MasterCard, and I put a little bit in the Apple when that happened. Do not regret it. I want more MasterCard because I just think that this company, they can't do wrong. And like everyone's got a piece of plastic in their wallet. That's another thing with MasterCard. Like MasterCard and Visa both just like hand in hand, you know. You can't go wrong with either of them. And they've just got such a big moat, and they're monopolistic as can be, which is what I personally like to invest in. I want to invest in something that's got like an advantage, an edge over all other competition in their sector. And again, I feel like MasterCard and Visa are both just kings. I mean, look at these metrics. It's silly. Return on capital is almost 50%. They're buying back shares at a rate of over 2% every year. Dividend increases are 22%, 25% over the last 10 years. Still mid to upper double digit averages. Like, it is nuts what this company is able to do and continue doing. Like, they've been around for a while. It's just silly. I love it though. Like if everything drops and S&P gets cut in half, you know, a lot of companies are going to go under. You know, a lot of your tech things, your tech heavy capital heavy companies are going to struggle. But even if that happens, everyone's still going to have that card, be swiping it, be buying stuff every day. They're still going to be collecting their money. And that's one thing I tried to build my portfolio around, is not necessarily like recession resistant, but if worse was to come to worse, I feel like these companies would be able to hold their own pretty well. Like Apple, everyone's going to have, you know, want their cell phones. Everyone's going to want all the different services. I think they have over 2 billion active Apple users. That's just nuts to me. CNI, I like this company. I like this railroad company better than the other ones. I feel like their debt situation's a lot more contained. And I seen a thing that Joseph Carlson did. Shipping by railroad is 4 times cheaper than the next method. So, like, again, if things get bad, they're going to probably pick up more business. Hershey, Monopoly, it's Hershey, MasterCard, we just talked about them. Texas Roadhouse, they are not super pricey. It's not like super fine dining, but it's also good enough to where like they stay super busy, and they're still opening up restaurants like crazy. Their financials is beautiful, chef's kiss. And Ulta, I mean, you've seen the news articles just whenever I clicked a while ago. It's like the swan resistant and all that. And they are also opening up new stores around the world. They still have some international growth, I believe, is what they're going to be focusing on. They haven't fully tapped into that yet. I'm just rambling on. I'm sorry, guys. But yeah, I tried to build my portfolio around not necessarily resistant proof. I don't think anything's recession proof, not resistant. Recession proof, but recession resistant, but do well when things are green. Okay, I'm done. Sorry. But what's everybody into this morning? How's everybody doing? I'd love to hear from everyone. Again, I'm just on here It's felt like live streaming, getting those YouTube watch hours in, and make the algorithm happy. Just ordered some Steak and Shake. Steak and Shake is good. There's one a town over from me. We had, what did we order yesterday? I'm blanking so hard. Panera Bread. There we go. We had Panera yesterday. My 4K monitor is coming in today. That is awesome. I don't think my monitor is 4K, so I can run my dual setup. I want a dual setup. I've got one of the curved monitor displays. I actually have the stickers here. It's 74 hertz. It's a Scepter, and it's a curved display, so it's like, you know, kind of circles around a little bit. I would love to have another one. Honestly, I'd like to have like 3. I feel like I'm in a cockpit. Might play Spider-Man. Hey, I'm probably going to play a little bit more Remnant today. I might fire up some Diablo 4. I don't know yet. I know the big bummer is I have to go back to work tomorrow. I don't want to. But I gotta. I know the whole month of December, I'm supposed to get my work schedule tomorrow or Wednesday. And I'm probably not going to be working too much in December because I work at a pier at a marina. I'm salary, so I'm still getting paid if I work 1 hour, if I work 100 hours. But yeah, I don't think I'm going to be working all that much in December, so hopefully I'm going to be able to live stream more. So I just like chatting with everybody, hanging out, looking up stonks. And hopefully one day, if the YouTube gods could bless me, I think it'd be neat to just be able to do this every day. And be able to live off this. That'd be literal dream come true material. But, like dividend investing, gotta grind it out day to day, keep on keeping on. Which reminds me, if any of yous have not watched my last upload, portfolio update, I released that yesterday, and on Friday I did a buy and hold forever stonks video. It's doing pretty well. I think the last I looked, it's over 1,600 views, which is awesome. But definitely go check those out, watch them through, hit the like button on it. Greatly appreciate any and all support, everyone's support, and just hanging out in these live streams. I appreciate it too. It's fun. Just sitting and chit-chatting and seeing what the market's doing. I'll refresh this, see if it's updated any. Seems like it's going to be a pretty flat-ish day overall, the way it's looking. Which, I mean, it's not a bad thing. I know Hershey, if they dip their toes in the 180s, it might be time to buy them again. I don't know. I've got such a big position in them already. My average buy with them's 218, so I am down over 10% with them still. Might have jumped in a little bit early, but I was okay with doing that with Hershey. I mean, the further it drops, the further I'm probably just gonna. I'm probably gonna continue buying that. I get paid on Friday. If Hershey is still in the 180s, I might buy some more Hershey and then some SCHD. The way it's looking, unless something drastically changes with the market. Let's see if there's any news that sticks out and catches the old eye. A lot of these make me curious whenever I see like 3 stocks to add to your portfolio in a market pullback. And a lot of times with these recommendations, a lot of the time I don't personally agree with them. 3 reasons: start diversifying away from Apple stock. Like, there's a lot of fear fear, a lot of FUD going around Apple. I think Apple's going to be fine. Yeah, they've had like decreasing revenue. What was it, last 3 quarters? But I feel once um, their services industry keeps growing and growing and growing, and that's much more profitable. I think they're going to be fine. I think they're absolutely going to be fine. Time-tested Titans. 7 stocks to anchor your portfolio for 10 years. Let's see what Investor Place is recommending. I'm curious. Is it Magnificent 7? Probably. Google, Microsoft, Apple, Visa. I agree with that one. I agree with the other ones as well. McDonald's. I'm okay with that one. Ferrari. Okay. Pepsi, yeah, they got a moat and a half. I mean, this is a weird list. To anchor your portfolio for the next 10 years. Like, I get the Apple, I get the Visa, I get Microsoft, Google. I'm surprised Amazon's not in here. McDonald's, again, I'm so on, and Pepsi, I'm so on. I did just sell those. But Ferrari, like, what? What are you doing? Let's take a look at Ferrari. I mean, they're up 70% year to date. And quarter over quarter, their revenue is just a growing. Look at that. That's silly. It's so silly. Let's see, over the last 5 years, 239%. Over the last 10 years, 568%. You mean to tell me this thing compounding at a 56% rate over the last 10 years? What? Revenue growth over 8% last 10 years. Free cash flow. A little bit of everywhere, but consistent growth. Growing dividend. EPS is growing. $2.75 billion in debt. The balance sheet's good. Dividend, kind of silly. Right at 18% growth for the last 5 years. It is a luxury thing. Like, it's not like Ford or GM. Like, it is a car company, yes, but I feel it's more of like a luxury brand. Because I wonder what their actual, like, how much they make per car they manufacture. Like, what is their profit on that? Good thing is I can look at that. Pretty silly. Gross margins, 48, 50s, operating margins above 20, profit margins 18% usually. What's the profit margins on Ford? Okay, theirs is 18% profit margins. Let's go to Ford, it's a legacy car company. This kills me. It's just all over the place. Like, the fact that this is an SHD infuriates me. Let's see here. Profit margins is... That's not good. So that's the thing with companies like this. Ford, GM, it's one reason why I stay away from car companies. I used to own mostly NIO, which was almost a mistake. Yeah, it's all over the place. Spikes here and there. But, like, your profit margin's negative for a lot of years. That's terrifying. Kind of reminds me of the airline industry. I still don't know why their ticker symbol is love. But I mean, if you look here, it's not consistent. It's kind of like everywhere. All over the place. Gross margins, operating margins are pretty low and decreasing over time. Sure, they got more cash than debt on hand. I guess that's good. But, like, I don't think there's going to be a time you're going to see me have an airline or a automaker in my portfolio. Don't really see that being something that happens in the future. Whew. Oh. Hoping it warms up a little bit later on. So Dillo, you said you're thinking about playing Spider-Man. Is it the newest one that came out? I know that it kind of regained its popularity over the last couple years. I know I used to play the older one for the PS2. I just thought it was so neat to like climb up on top of the buildings and just dive off. If there's any stocktions you want me to look up, let me know. We can dive into it through Qualtrim. If there's anything you're wondering about, let me know as well. Just hanging out, chilling. List of my kittens running around. Deer's not on my watch list. I just realized that. I just want more of a value play. Everything that I own mostly has crazy high PEs. I mean, you know something that doesn't have a crazy high PE? John Deere. I actually need to add Deere to the watch list here. Where's it fall at? 200-day moving average in a dip, 7%. I like that. Yeah, Deere's down 2% today, too. PE ratio. Yeah, there you go. You know anything that buys back shares and are just really well ran? I mean, to add to your watch list, something that buys back shares. Well, I mean, I've talked about it a couple of times. Alta buys back their shares. Over the last 2 years, a rate of 4%. Last year, over 5% of their shares bought back. They're sitting at 51 million shares outstanding, and they've even bought back more. This is just decreasing quarter over quarter. Another one that comes to mind, AutoZone. They buy back shares pretty aggressively, over 6% in the last 10 years. And they're down to only 18.6 million shares outstanding. And they reported profits are expected to accelerate. Are you serious? They can they do wrong? And their PE ratio is pretty not that high. They usually hover around the 20s area. I think Deere's been doing some buybacks. I don't have to keep my eye on Deere. I like it. I definitely like it in this area. It shot up over $400 there at one point. Is it 440, I believe? Yep. But even them, they've been buying back their shares, 3% over the last 2 years. But yeah, I'm right there with you. I love a company that does share buybacks. A lot of the railroad industries do share buybacks as well, pretty aggressively. CNI, right at 4% over the last 2 years. I like them a lot. What are some other companies that just do share buybacks? It super aggressively. I think they're an AutoNation. Yeah, it's another auto stock. PE below 6. Yeah, look at that. Over the last year, they bought back 24.4% of their shares. That is crazy to me. And I think they bought back even more. It's 56 million. We're going to look at the quarterly for updated. 44 million. So they've bought back another 12 million shares. So, I mean, if you're looking for, a solid value stock buy. Again, I'll never tell you what to buy, what to sell, but this might be something to look into. I mean, they literally just throw all their free cash flow into buybacks. And this is because of new management that changed over a couple years ago. So I had to do some research into it myself. So I was like, what is going on here? Their share count is just getting like just obliterated in a good way. And yeah, that's like a part of management's plan is to just gobble those shares back. But a lot of the auto like suppliers I feel do that. What are some other, I think Allstate does pretty aggressive share buybacks. Yep. Over 7% last 2 years. Yeah, I mean, there's plenty of pickings out there. And there, you can't go wrong in trying to find something that's at a good value, decent PE ratio that's buying back shares, because when companies buying back shares, you want them to be buying back cheap shares, so you get a more and more bigger piece of the pie. That's the reason I love a company that does share buybacks. It's the thing I love about Ulta. It's the thing I love about MasterCard, CNI, Apple. All of those do share buybacks pretty aggressively. I don't think Texas Roadhouse does, and I know Hershey barely does any, which is fine. I still like those holdings a lot. Oh. Oof. So what's everybody, anyone else into anything special this morning? Looking at anything special? Any surprise things on sale? That's the one thing I like about Seeking Alpha that I wish I had access to. I don't have the premium for it. But like you can pull up like the biggest losers and gainers for the day, and it like brings you up a list. I just think it's neat. I think that's real neat. Now, if you can hear that, my kittens are just having a field day right now. Love Seeking Alpha. Yeah, I'd like to have it too. It's just like it's what is it, $200 a month? Not a month. Oh my god, $200 a month. $200 a year, I believe, for their services. But the thing I would like about Seeking Alpha is they show FFO, like funds from operations, and I don't have that access with Qualtrim, unfortunately. So when I talk about REITs, I usually have to do a little bit of searching ahead of time, because I don't want to just get on here and recommend a REIT that's just complete garbage. No one likes that. So I do try to do a little bit of research and stuff ahead of time. Jeez, I like Extra Space Storage so much. The largest storage facility in the United States. A behemoth, even. 3,500 locations. Oh. So how is, I wonder here, because I know Tesla was having some awful times last week. It seemed like every piece of news was just negative for Mr. Elon. Oh, it looks like it dipped almost to under 200 again. I mean, if I could go back in time, like this, Nvidia at the start of the year, crazy. Absolutely crazy what these companies are able to do. The growth, the quick growth behind them is just silly. Ow. Oof. Yeah, I'm definitely gonna have to keep my eye on old Mr. John Deere there. Especially if it dips any further. This thing dips into the 340s. Absolutely going to be probably jumping in. Upcoming earnings. I probably should look at this for my actual portfolio now that I'm thinking about it. Yo, Intuit's is tomorrow. Yeah, that's when I'd love to see drop. That's a big one. Intuit's so strong. Such a big moat. My own portfolio. Yeah, it looks like Ulta's earnings are on the 30th, but besides that, I don't really have any of my other holdings having earnings till the end of January. I know it's not always good to like try and be an earnings sniper, but it's been a crazy year because there have been stocks that report really good earnings and they'll drop 10-15%. And then there'll be some that report like cut even or bad earnings even, and then they'll go up. And I'm just like, that doesn't make any sense to me. Excuse me. Because that's what MasterCard did. MasterCard reported, pretty okay solid earnings. Nothing super bad, and it dropped like 6%. I mean, of course, that's when I jumped in. It's just been a crazy year for that so far. Been an absolutely crazy year. Makes you wonder what 2024 is going to have in store. I need to add my portfolio on here. It's been a while since I haven't really updated anything with Qualtrim because I usually track all my portfolio stuff over on trackyadividends.com. I know next month's going to be fun for dividends for us. We got getting over $32.78 in payments. Wait, hold on. $32.55 in payments next month. All of these will be dripped back in. Every one of these will be dripped back in. Just try and get that dividend snowball to be a little bit more at a time. I love this site though. The thing I really like about it is like the future valuation, and you can kind of chart out and customize it the way you want. And you can kind of like estimate where you'll be in, was it 10 years, 15, 20, 25 years. So I think it's a neat little tool. And hopefully my my retired date in mind to where I can hopefully live off my dividends is when I am either 45 or 50. So it's going to be 14 to 19 years. And I know that's, it's a long ways away. There's still a lot of grinding to do, but I'm here. I'm going to show my journey with the ends as much as possible. Continue doing the live streams when I'm able to, as much as possible, because this does help. I don't really have all that many people to talk about the stonks with. So just get on here, jabber away. Yin's listening. I appreciate it. But yeah. Anyone got any you got any questions? You wondering about anything, Dillo? Want me to look up anything? Or whoever else is in here? Let me know. Be more than happy to look up some stonks or ask me anything. Oof. I know it's Monday morning. A lot of people are probably at the work. Doing a work thing. Might have to try and do these live streams on the weekends. I think that might be better. Might be a better idea. But, yeah. I think I'm going to run for now. Hop on here for a little bit over 45 minutes or so. Dillo, I hope you have a fantastic evening. Everyone, take care. It is Monday, so let's start off the week strong and good, and just keep on trucking. Thanks for dropping in, and I hope everyone has a great evening.